welcome to the Zoom Out podcast. I'm Tim Niemeyer. I'm joined today by Joakim Book. Joakim, how are you doing today?
I'm good, man. How are you?
I'm doing great. I'm glad to have you on. For those that don't know, Joakim is a writer, researcher, and editor on all things money, finance, and financial history. He holds a master's degree from the University of Oxford and has been a visiting scholar at the American Institute for Economic Research in 2018 and 2019. And for those who might know, he also has a special place in my heart as he is the editor of my book, History Echoes Bitcoin. So, man.
Yeah, we got it here somewhere in the Bitcoin.
Yes, that is a very substantial library you have there. What percentage of that would you call economics?
All of it.
Oh, that's right.
So economics, man, all of it. No, most of it. Like most of it is economics, financial history, monetary history, how central banks operated today and in the past, things like that. The Bitcoin shelf is still a little bit small. This one here. Bitcoiners, I know you're good at writing, but you need to write more.
You know what? I'll take that as a challenge, and I'm going to get on that.
Good.
What got you into economics in the first place? Because that is not something that usually people say, you know what? I want to study the economy.
Yeah, actually, I about 2012, so 14 years ago, 12 years ago, I felt like an idiot. That's the short story. Like I legit couldn't understand what was going on. I remember reading an article in the Financial Times, and it had to do with the Euro crisis. I think that was the big thing during the time.
Oh yeah,
that European countries and their public debt problems and things like that. The euro might collapse. That was the sort of fear that we had in the early 2010s. And I felt that it was important. It seemed like an important thing. I couldn't understand anything. And like I was reading this article seriously trying to understand what was going on. And I didn't understand. Like they were talking about debt and where it came from and how governments acquire it and what they're doing in macro management. And I was like, what? I have nowhere to place it. And I have nowhere to understand what's going on.
No context at all.
That's basically when I realized, fuck, I need to study this. And when I started studying it, there was no looking back. There was just like an endless plunge into fascinating things and how money works and how finance works and how banks work.
So that was like the rabbit hole before the Bitcoin rabbit hole.
Yeah.
So you had already been in. When did you find Bitcoin?
Yeah, I have a long and troubled history with Bitcoin, and I fought it for a long time. I think a lot of legacy people who come from legacy economics and legacy academia and places like that, they fight it harder than the plebs. So I fought it for a long time. I first heard about it in 2015. My claim to fame is that I knew Stefan Livera before he got cool. I used to live in Sydney, and we were buddies back then.
Oh wow! Stefan, for those that don't know, he's a great podcaster. Really deep into Austrian economics and also the very technical aspects of Bitcoin. Yeah. Definitely check out his podcast. Go ahead.
So he definitely has a forever. He's going to have the "I told you so" on me. So I was very interested in central banks and monetary policy, things like that, and I heard about it in 2015. And I was like, you guys are like crazy. Like this is just techno babble and like crazy libertarians. Nobody's going to go for this. Like go away, guys. Like I didn't see the point at the time. Like we had like the problems that central banks had in the mid-10s. It's hard to believe right now, but the problems that they had then was that they were trying to get the inflation target up to, like the inflation wasn't at 2%. It was 1.5, 1.2, and they were doing everything they could to get it up to 2%. And here comes all these crazy libertarians and Bitcoiners screaming about, the coming hyperinflation. You're like, dude, they can't even get the inflation to 2%. What's like, stop. The fiat rails work great. My MasterCard is awesome. Like I can pay with PayPal and Venmo. I don't need you. I couldn't see a point with it for a very long time.
So if I were to think the average American, is my audience, but there might be some around the world. Most people don't understand economics like you did before you started studying it. And they hear the word inflation. You mentioned the word inflation, and you and I feel like we've have a deeper grasp because we've been studying Bitcoin for a while. And, I didn't go to college for economics, but I was a shade tree. I read a lot before I got into Bitcoin. So I was kind of primed. Even then, I still had a basic understanding of what the media thinks inflation is. So could you maybe very generally kind of describe the difference between the common conception of inflation and what you might believe inflation really is, without getting too deep into it?
There are levels to this, right? The standard distinction is, the standard story that we tell is that price is increasing, and that we have a CPI basket or some collection of prices that increase together. And you're like, oh, look, inflation. Something is more expensive today than it was, last year. Sometimes you even get that in specific, there's energy inflation. It's like, no, what does that even mean? Stop. So inflation is the idea that all prices are increasing at the same time. And originally, if you go back 100 years or so in economic literature, inflation was used to mean the expansion of the money supply, and the increase in prices was just a symptom of inflation. So inflation, with the word we use today, is the consequence of the process the word used to mean back in the day, basically. Right? So this is an endless source of confusion, because then, gold bugs or Bitcoiners or other people say inflation and they mean an expansion of the money supply. And, the legacy economist or somebody on the media would say inflation and they mean prices increasing.
So it's the difference between the symptom and the cause.
Yeah, pretty much. But then when you talk about the prices, you get into the endless debate over, okay, which prices? Are we accounting for housing? Do we take how much the average person's spending on groceries, a poor person, somebody who has a family? All of a sudden we get into this weird trade-offs, and the way that statisticians do this is that they do a weighted average of the things that people buy. So when people buy more of something, they put more of that in the basket, and if they buy less of something else, they take that out of the basket.
So that's similar to the whole the average American household is 2.5 kids. There's no such thing as a half. Well, I mean, there might be, but half a kid. It's an average. It's not the actual. Yeah.
Yeah, the average human being has one breast and one testicle. That's not a helpful statement. Go away, guy.
So now that I've been into Bitcoin for 5-6 years, whatever now, I have a hard time going back and understanding why the mainstream media says that inflation is a good thing. Now, I know it as, well, it makes it easier to incur more debt, to take on more debt, right?
Yeah.
In the short term. I mean, we're robbing Peter to pay Paul, we're borrowing from our future selves kind of thing. But that's not the narrative. Can you even conceptualize why they say it's a good thing? Almost steel man their argument.
Oh, I can steel man their argument and give the actual economic reason for why it's the economic story for why it's a good thing. I don't think that's what the media generally gives you.
No.
The media generally gives you some form of boilerplate that, it makes economic transactions easier, and it makes it easier for people to earn an income and get ahead of their payments and not.
But that's not true.
I mean, there's something if you Google this in economics literature, there's something called monetary misperceptions. It's one of the reasons why inflation works. So just go back to basics, right? Imagine we add a 0 to every single bank balance and outstanding banknote or everything. Every number just times 10, right? You earn 10 times more in dollars. There are 10 times more dollars outstanding. Your debts are 10 times as much. Everything just increased by 10 by tomorrow. Everybody knows this, and tomorrow this happens, but nothing is going to change, right? We're just going to have a bigger number, but we're going to consume exactly the same things, and our debts are going to be exactly as hard to carry or pay off, right? So there's no effect by just changing the number, right? So, and the same thing goes for a small number of inflation. If we know that there's going to be 2% inflation in absolutely everything, everybody understands this, it has no effect. It does nothing, right? So the only way that inflation actually impacts something is if it's not expected, so people don't know that it's happening, but then you're benefiting the people who knew or who took advanced actions or hedged their bets, whatever, over people who don't know. Usually that means you're helping rich people over poor people, but that's a separate issue. Or you're fooling people differently, in a different way, and that's what monetary misperception is. So monetary misperception is when somebody who's selling something suddenly gets more revenue. They're like, wow, we have so many clients now. And they think that means that there's an increased demand for their product. but it's just an increased amount of money in the system. So they start producing more than is optimal. So they're overproducing basically, and they're producing more than they would have under a correct money rate. So the money fools them into making more stuff, working harder, doing more things.
In a way, it's like pushing harder on the gas pedal to increase the speed, but at the same time, you're running out of gas quicker. In a way.
Yeah. It's almost like the meter, the gas, the fuel meter wouldn't move. Like you do this, and the fuel meter doesn't move down. Like it just stays where it is. You're like, awesome! I have this much fuel, and I can keep going at this speed. Like no, there's a hard stop where the fuel actually runs out. It's not going to work anymore. So there are a lot of these things that inflation does that's a little mischievous. That it tricks people into behaving differently, and I think that's the really evil part about it.
Well, and one thing that's kind of gone sort of said but unsaid or unfocused on is that with this style of monetary policy, I guess is the correct term, it's controlled. There's a group of people that have the ability to press on the gas or lighten up. And I mean, I know my take on it. Do you see anything wrong with that, or what might be some ill effects of that?
Yeah. So just a couple of, I think last week, I don't know exactly, but there was a Fed meeting, and there were 3 people in my like intellectual echo chamber, I guess, like Bitcoiners and macro analysts, who all separately identified that. What are you doing? So Jerome Powell comes out, has a press conference, tells everybody what the decision by these 12 people behind closed doors, what the decision was, and takes some question from journalists, right? It's all a little bit theater, right? Like he tells them what the decision is, they ask some questions, and he deflects the questions, and you're like, okay, what did we get from this? What are you guys doing? This is ridiculous, right? All 3 of these people, like famous Bitcoiners and macro analysts, they just identified, hang on, he isn't really saying anything. Like he says, we will cut rates if and when we're confident that inflation is coming down. Okay, and then like somebody from New York Times asked, okay, what would that look like? You know, like what's something that would make you confident? And then he like hand waves and goes on and doesn't give you anything. It's not like he says, oh, when unemployment is 2.57, we will do this. You know, like there's nothing tangible. There's nothing whatever. It's just like, oh, it's all data driven. It's all when we're confident and whatever. And there's a beautiful quote by Milton Friedman. I'm going to butcher it, but it's from the 70s or something. And he's like, yeah, that's not a monetary policy. That's just a dude saying, that's a dude telling you what the policy, that's not a policy. I can look up the rate, but that's not a policy. So one of my favorite quotes is from John Vallis. He's a Canadian Bitcoiner podcaster. Dude.
Brilliant guy.
And he says something like, Bitcoin is a vote of no confidence in discretionary monetary policy. Okay. So vote of no confidence means that you just, I don't think you can do this anymore. I'm out. You know, this is wrong. I do not want to comply. Like when you do a vote of no confidence for somebody who's in office or a prime minister or something, that's saying I don't think you can do the job anymore. Get out. Discretionary monetary policy is this thing that we run in the 21st century. So that's monetary policy made by a bunch of people at their discretion. Like there's no rule that says we need to uphold the gold standard or we need to do this thing or whatever. It's up to their discretion. They can follow the rules, they can overshoot the rules, they can do whatever they want, right? So Bitcoin is a vote of no confidence in discretionary monetary policy. Because we don't think that it's capable. And it's not the guy in charge, right? It's not a presidential, like we just need to vote in somebody else and then have somebody else replace Jerome Powell and run the central bank. It's the central banking itself. We don't think somebody can do it. Like, let's get out. We can't have that.
So there's a couple things. There's a couple things there to me that's important to like touch on. One, the fact that it is a human and humans are fallible, and he has a lot of incentives, a lot of different connections that are pulling him in different ways to make that decision, which might not be the best for everyone.
Yeah,
it might. And the other part is that those people that are pulling on him are the wealthy or the powerfully politically connected, and they're the ones that get benefit, like you mentioned earlier. I don't think we really need to dig into Cantillon effect, but basically that's what it is, those that are closer to that money spigot are the ones that benefit more. So by his making his decisions, he's affected by that, and he's more likely to help those guys out that will help him, right? So when you say that vote of no confidence,
when Bitcoiners make this sort of argument, I'm always a little bit skeptical, right? Because it's harking back to this, like secret people making decisions in a back room, and they're like all screwing us over.
let me get my tinfoil hat here.
Yeah, it's a little tinfoily, right? And it's really hard to uphold conspiracy. Like, they usually fall apart because there are too many people involved and information leaks and whatever. So like when there is something that looks like a conspiracy, I tend to default to thinking that this is just like selection or outcome of a process, and
I don't think so much conspiracy as incentives, right?
Yeah,
everybody's incentivized. Like if I come home hammered, my wife's going to react differently than if I come home and like put the kids to bed, right? So I'm incentivized. So you're right that there are a lot of different incentives pulling at him.
Yeah.
But I'm not trying to go for the conspiratorial route. Is just pointing out humans are fallible and they are more likely to make decisions not just off of just basic math, let's just say.
Yeah, I think that also goes to the vote of no confidence thing. That it's not the person in charge. Like it's not. We can put an angel in there. Central banking is still not going to work very well. Like it's not the person. Like I don't blame him personally. What's he going to do? Like he's imagine you're early March 2020, and like the bond prices are collapsing. Everyone's worried about invisible enemies. Like, what do? Like you're in charge of the central bank and the money spigot. What are you going to do? Like, are you going to uphold some responsible monetary policy because you think that's right? No, you're going to do everything in your power to save, the markets and bail out everybody you can.
And so that's a valid point.
Then but it's like there's no way for him not to do that, basically. And he can always spin that they can always spin that in stories of the market wasn't functioning and we need this and we're supporting the American people, yada yada yada.
Well, there was another point in there, though, that you keep coming back to the central bank, the person or group of people. And when you talk about a vote of no confidence, while that's true for Bitcoiners, it's also the vote of confidence in a system that's not centralized, that's decentralized. And maybe you could speak to that, like what would be the benefit of another system that doesn't have that centralized control?
Yeah, so one thing, like it's easy to point out all the costs and the problems with a system like that. That's what legacy economists and media personalities do all day long, when they talk about Bitcoin anyways. Like, except when they proclaim that Bitcoin is dead, which happens rarely these days.
It's going to happen again.
It's been a while. I haven't heard Bitcoin is dead in a while.
True.
It's a little harder to point out the benefits unless you're in a shitty monetary system already. Like it's very easy to point out the benefits if you're in Nigeria or South Africa, or you're in Belarus and you're an activist or of some kind. Like very easy. Like nobody can take this from you. Nobody knows you have it. Somebody else from across the border can send it to you. Like those are crazy good benefits. For a random pleb, normal person in the West under a semi-functional monetary system, it's harder. It was definitely harder in the 2010s when I first heard about Bitcoin because everything seemed to work, right?
You're not feeling the pain.
You're not feeling the pain. Like even if they expand the money supply at 5-6% and prices increase by 1.5 or 2%, I don't really feel that. I get a wage hike eventually. Maybe I own some stock and I own a house, or my parents own a house, and then they increase the prices of the house increase. And like, I don't feel like I'm worse off. When we do 10%, all of a sudden everybody feels it. Like,
well, and it's kind of going to that whole frog in the frying pan thing. If you start the temperature slowly, the frog won't notice and won't jump out.
Yeah.
So that's us in the West.
Do that. Like Google this. Huh? Frogs don't actually do that. Google this. This is a myth.
It is?
Yeah, they just get out.
I think maybe not a frying pan because it's direct touch, but like maybe the water. I don't know. The idea is that you're not going to react to the stimulus if it's just a slow increase. But I'm going to Google that now because I've been using it my whole life. See, this is why he's the editor. He's got this.
Yeah. I also wanted to remark on your mentioning of Cantillon. His name is Cantillon, and Bitcoiners say Cantillon, like billion.
Really?
Yeah.
English speaking Americans, we butcher stuff all the time. I butchered your name probably horribly.
No, it's fine. It's also so funny. It's such a good indication of how long somebody has been in how long they've studied economics or economic topics and whatever. When they show up and they mispronounce Keynes' name, or they mispronounce, like, they're like, oh yeah, this Austrian economist Ludwig von Mises. It's like, yeah, you haven't been around for a long time because his name is Mises. Like, stop.
Litmus test. There you go.
Yeah. And like
Profile 101.
kind of silly things, right? These are sort of silly things, and yeah, names, whatever. But at some level, I tend to think that they are my task to. I take them on my shoulders, and I kind of want to fix that. Partly because like like it sounds like it's superficial. It doesn't have a purpose, but it does, because legacy economists and legacy media would laugh at you if you don't pronounce the name right, or if you don't like spell things properly, or if you don't use hyphens the way that you should, whatever. Like, people just look at them like, what is this idiot? Like, he can't spell, he can't pronounce the name. Like, presumably all the rest of the stuff that he says is just nonsense. So sometimes I feel like my task as an editor of a lot of Bitcoiners' work and in this space is to just like make stuff. It's a purpose of hygiene, basically. Make stuff readable, make stuff like approachable for everybody else, so they can't, like, they have to engage with what you're actually saying, not just like, oh look, he can't spell, oh he doesn't know how to say Mises' name.
Right.
Yeah. Where were we? Sorry, I interrupted.
No, that was great, and I'm just having flashbacks to the book editing process, because there was a lot of things like, shit, I was way off on that. But I appreciate that. I needed that.
It happens a lot, man. Like, I'm working with two guys right now. I'm not going to dox them, but they just write that the Fed has a GDP growth target. Like, no, where'd you get that? Like, the Fed doesn't have a GDP growth target. They have an inflation target, and they have a mandate to like keep inflation low and the employment high, and financial stability, things like there are all these like very basic things that Bitcoiners just like have, and I like, for some reason they got it into their heads that, oh, this is how it works. Or Jimmy Song had an article like called something like "Taxes are Revenue Theater," and he just like, oh yeah, we don't need taxes, and taxes don't pay for anything because the government just prints money for things. I'm like, okay, I've heard this story before. It comes from MMT. Stephanie Kelton says this all the time. Very strange that Jimmy Song is wanting to be that, but okay.
Wow,
and then you look at the numbers, you're like, what do you even mean? Like, the government taxes, 60% of its income, 70% of its income is tax, and the rest is debt. Even if you counted all of the debt as money printing, which it isn't, it's like, it's not revenue theater. Like, what are you talking about? Why? And like Seyfedina says stuff like this, and yeah, Bitcoiners just say random shit, and I like. So again, this sounds like a silly thing to remark on, but I think it's one of the big reasons for why legacy economists don't take Bitcoiners seriously, because they just spout out shitty things that aren't correct. They're like, okay, so they don't have a clue, right?
So in that, I'm going to go ahead and spout out some stuff, and I want you to correct me.
Yes, please.
Something Bitcoiners believe is that this whole idea of inflation is kind of BS, and that with Bitcoin being, I'm not going to say deflationary, I'm going to say disinflationary.
Okay. Look at me. That's more accurate. Okay.
Yeah. Being disinflationary, that's better for, I'm going to be as general as possible, for societal growth. In terms of not being saddled by increasing debt.
Yeah.
First of all, is that accurate? And second of all, what is your take on that?
I think you can make a case for that. Like, yeah, I don't. If you wrote that in a book manuscript or an article, I wouldn't scratch it out. Like that. It's okay. There's a lot of nuance there, and especially around the words you were using. That it's like, it's better for societal growth. Like, what does that mean?
That's huge. That's loaded.
Yeah. And even the growth part is not that easy. Like, we can say economic growth, but maybe then spiritual growth or community isn't, like, community is not working or something like that. There are always some interpretations of why that doesn't work. A lot of East Asian countries that grew rapidly in the last couple of decades, for instance, a lot of people there talk about how family bonds have deteriorated and communities don't work very well. You're like, okay, we got economic growth, but we ruined something else, right? So then we can say
trade-offs
didn't work.
There's no such thing as a solution, only trade-offs. I'll buy that. What about the trade-off? Let me get more specific then. I strongly believe, and this is anecdotally. I mean, I don't have any hard evidence to support it, but the idea of the inflationary system leading to a high time preference mindset. And for those who don't know what I'm talking about, it's talking about like the immediacy of filling your needs, I guess is a way to say that.
Yeah.
And a low time preference mindset, which Bitcoiners tend to believe the system of Bitcoin, the disinflationary nature, we are lower time preference, we're planning for the future, that kind of thing. Where do you fall on that?
Yeah, I like this idea a lot. I think it's hard to condense it into a single thing because I can be very
quantified.
Yeah, that too, but also like in one behavior, like if I go to the gym, right, that's a very low time preference behavior because I suffer right now and I'm going to get stronger and better at something way into the future. Not next month, not next week, like years. My body gets stronger and I'm able to carry harder, heavier things and I can run for longer and things like that, right? So that's a very low time preference thing. And then maybe I go to the store and I see some chocolate cake and I'm really hungry and I buy the chocolate cake. That's a very high time preference thing. Like, why couldn't I resist this chocolate cake that I don't need? So
the stuff I get now, the pleasure I get from it now, the trade-off is like down the road you're going to be in worse shape.
Yeah, and like I think it's sometimes we just throw this thing. Like I think it is better for most people to live with a low time preference mindset if in some kind of like objectively speaking, or if we just like reasoned about things. But we all like go buy that chocolate cake, and then
it's a spectrum.
Yeah,
it's a spectrum, and wherever that midline is, maybe just like shade to the low time preference. I mean, there's stuff that I like to do. I'm getting ready to go down, travel out of state with my friend this weekend to go watch a concert.
Yeah,
and I enjoy that. I'm not saying save everything for your future generation and suffer now. That's not what I think I'm going at. But
yeah, I mean, what's the joke in Bitcoin land? It's like we still have chairs. Why haven't you sold all your chairs? Buy Bitcoin. Exactly. What are you doing, man? Sit on the floor.
But then for like, and I keep using societal growth. I need a better phrase than that. But the negatives that we're seeing from our current system can be somewhat connected to the system of central banking that pushes inflation.
Yeah, I think so. It's hard to exactly find out the mechanisms, and like I was reading Seb Bonnie's book, The Hidden Cost of Inflation, the yellow one here. Like he makes that exact case, but he doesn't really prove it. He doesn't bring the evidence for it. I believe he is correct. Like I think the monetary system and the way that we live just incentivizes us to spend. Like we can't hold the money, so we need to get rid of the money. So either we buy stocks, or we buy stuff, cars, vacations,
and now
concerts, right? Like we can't hold money. We can't just like sit on it because that's a guaranteed loss. So for sure that either you hold the money and take the loss, and so you impoverish, the people who hold the money and don't know what they're doing, or you highly incentivize spending in the now on all sorts of shit. And I think that applies not just for a person, but also for governments in general, like large scale investments and stuff. Like politically speaking, we have this political apparatus that basically says, give me stuff. I'm going to vote for the person who gives me stuff. And I think my things are important, and some we should take from the rich and give it to, student debt cancellation or whatever else the topic might be. Like I think all of those things are very much symptoms or consequences of time preference.
So let me ask this. I'm going to kind of pivot a little bit. I know from you that you're very healthy. You're into yoga. You're very into the outdoors and nature. I love that. I've always been into nature. I kind of lived right down the road from Abe Lincoln for a while, where he grew up, and I would travel the rivers and streams literally right by his place as I was growing up. But I was never what you might call healthy until I got into Bitcoin. So this is N of one, anecdotal, but maybe not from buying Bitcoin per se, but from studying Bitcoin.
Yeah.
I've personally adapted not only a low time preference, but like it's shown up in all areas of my life. My health is, I'm 46. I'm the healthiest I've been, and I'm only getting healthier.
Same.
You know what I mean? So maybe not the monetary aspect of it, but just that mindset.
Yeah. Yeah, for sure.
understanding. Go ahead.
And there's so many, like, it cannot be a coincidence. Like, this is not just like anecdotal. Because we can start, we should make a list, of all people who've seen Bitcoin change their lives like that. And it's going to be massive. Because everybody does that. Because once you start thinking about money that doesn't just melt in your hands and doesn't require you to become a Wall Street gambler, you start thinking that same way in every other aspect of your life. Oh, I only get things if I produce value. Everything valuable is proof of work. I need to put in the work and do value before I can receive the rewards. Okay, cool. So people hit the gym. People start eating meat. People cut out the junk food. People take care of their families. And all of a sudden you got a fucking spiritual awakening going on because and it's it just started with the money. And yeah, I don't know exactly what it is that's happening and what are the mechanisms, but it's definitely something about thinking about the long term and okay, how do we move value over time? How do I protect value?
And that was the thing for me. The money over time, it's what is money? It's supposed to be a ledger of your effort, your output and time. And I always like to say, I used to say all the time, Bitcoin fixes this to literally everything. I was guy just shouting it from the mountaintop. But now I say Bitcoin incentivizes this.
Nice, yeah.
And that's kind of what we're talking about here, is that there's a greater incentive on maximizing my time to set me up for better times in the future. You know what I mean? Because the system with Bitcoin's limited supply that can't be changed by people, I can see my energy being stored, and just that idea that, oh shit, I can store energy.
Yeah.
I can build upon that.
Yeah.
As opposed to, like you said, that 2%, 5, 10, whatever that is, it's always going to the here and now. So it's definitely a time. I value my time more after studying Bitcoin.
Yeah.
Regardless of the price of Bitcoin, the dollar price.
Yeah, absolutely. I think I do. And I think I definitely trade off more. I don't know if this is a high or low time preference behavior, but I definitely trade off more time to spend, and I'm more careful with how I spend my time. Am I gonna do this today? How am I spending? What am I building? What am I trying to create? And that mindset is so much in my time. I think maybe there's a gender divide here too, or a sex psychology thing going on, that men just want to build shit, and yeah, I don't know. But for sure, there's some mindset thing going on when you're starting to think about, okay, how do I move money into the future? And then, well, I also want to be healthy in the future. How do I move health into the future? And you're just almost obsessed with the future. How do I
dig that. And you're obsessed with the future by living in the present moment.
Right. Yes.
As opposed to stealing from the future. We want to have a better future, so we're going to take from it, and that's that inflationary aspect.
It becomes this weird, I don't know how your personal finances are structured, but I know Jimmy Song has talked about this too. I was shitting on him before. I should say something good about him now. He has this idea that we're all culprits of this. We're all using the monetary system, and we're all abusing the monetary system. I'm happy to short the currency to get more Bitcoin, which is basically what you do every time you take on debt. You short the currency. A lot of people have mortgages, right? And mortgage is a perfect example. You take on soft monetary debt in a fiat currency to have a hard asset that appreciated over time and is likely to continue to do that, right? That's shorting the currency. You're short the sovereign, you're short the currency. You're trying to increase your own nominal wealth by shorting the currency, and basically shitting on people or fucking over people who hold the money.
Well, and even more so, it's shorting it further and further into the future, and that's going to be our kids' generation and our kids' generation. So if you want to be really, I don't know if absolutist is a word, or really hardcore, you can just say, by doing that, you're fucking over your future generations. And I don't think people think of it that way. I don't think most people see it that way. When I take on debt, I'm making the future for my kids worse off.
Right. Yeah.
That's not exactly right, because if you take on debt to, like a business taking on debt to build the business,
Here we go.
that's different. I guess what I'm talking about is more of that personal consumption, entertainment, that kind of stuff, just for personal gains.
And the differences
Because
they aren't that easy to distinguish, right? Like the lines are a little blurry, and a lot of businesses are taking on debt, and like we had this problem in the last couple of years with very low interest rates and malinvestments and all kinds of shitty businesses that shouldn't exist, and they were just spewing money everywhere, right? So, and at some level, the legacy macroeconomic argument for why inflation is good and money printing is good and deficit spending is good stuff is because spending in the now can create value in the future. So if we take on debt and we do something now, and we create, like, I don't know, a typical example is a good highway that can connect a couple of cities, and then we can have a lot of people moving between them, and labor markets get better, and that's going to pay off over a long time. But we have to build it in today. But then we take up debt or print money to do it, and we get something real that actually benefits the economy over time, and that's the story. And it's kind of plausible, and for a lot of things that the government, or in a world without a government, a government-like institution, or would take on those roles. They're like, okay, I'm going to build a road, and we're all going to benefit from this thing. There's going to be a public good. We're all going to derive benefits from it. Like, I live in a mountainous area. Like if somebody wants to build a tunnel to some place, it's super beneficial to all of us. So we should all pitch in, right? Like I could see you want to take on debt to do that because it benefits people over 40 years. So you need some form of trade-off like that. But then,
well, and
which ones? Some of these projects are correct and some of them are not. And then we get back to the basic economics of how do we figure this out? Usually with entrepreneurs taking risks and interest rates reflecting the price of time. And if we meddle with the interest rate, then we don't let entrepreneurs fail, then we don't have the feedback signals anymore. Everything goes to shit, and everybody, builds WeWork and fake meat and all the other crap that we've had in the last few years.
You're breaking the measurement device.
Totally.
Yeah.
Yeah, you can't.
Well, and I've even had some.
Yeah.
I've even had some Bitcoiners. It's not so much debt, but I've seen a lot of Bitcoiners recently, and I'm kind of circling back to something where they sell off a lot of their Bitcoin to reinvest in themselves.
Right.
And to me, that's the brass balls right there. That's the total belief in yourself and the total belief in I'm making the future better, right? Because you have to have a pretty high hurdle rate to get over Bitcoin's rise.
Yeah, right. Yeah.
It's like that Preston Fish interview that he just had on McCormick with talking about MicroStrategies.
Yeah.
Oh man, their strategy. But that's a conversation for another time. Joakim, we're coming to the end of this. Is there anything that we didn't cover that you'd like to touch on for the audience in terms of understanding economics, inflation?
I don't think so. Like we touched on them a little bit, and if you're interested, there are a lot more resources all over the place. Start looking around. Like
where should we send people if they want to learn more about economics without going, to Oxford or wherever?
I've learned. I wouldn't say I learned very much economics at Oxford. Like I have this thing that I like to say, that the most important thing that I learned at Oxford is that you can have a PhD and still be an idiot. That's very cute. No, I've learned a lot from the Mises Institute. Shout out to the Mises Institute. I'm also affiliated with another economics institute called American Institute for Economic Research. There's a lot of good economics content there. I also very much like, there's a Substack that I read religiously by Josh Hendrickson and Brian Albrecht, and it's called Economic Forces or Price Theory, something like that. And Josh Hendrickson is a fellow at the Bitcoin Policy Institute now. What, Bitcoin Policy? Yeah, Institute. And they write really, really well about price theory and stuff that happens. And Josh is writing a lot about money these days.
Well, and not so much economics, but if you want something to read on Bitcoin besides history echoes Bitcoin, you just finished a book within the last year. You want to give a shout out to Lynn there?
Yeah, I was working on Lynn Alden's book. It's absolutely awesome.
It is intense.
It's this thick.
Love it.
It's heavy. It's approachable. It's serious. It's really good. Yeah, I loved working with him.
What are you working on? What are you working on now, moving into the future? You said you're working with two other guys. You don't want to dox, but
yeah, I don't know if I should dox them, but I have a couple of things, a couple of people, a couple of manuscripts I'm working on, so they will come out eventually. Otherwise, my day job in the Bitcoin world is basically to do copy editing for Bitcoin Magazine, or I also do book reviews for the print magazine, the physical print.
cool.
So shout out again to Bitcoin Magazine. But we're gonna plug everybody today.
Love it.
Beautiful.
Well, speaking of plugging, where would you like people if they want to come and follow you? Where's the best place to follow you?
Twitter is fine. Joakim Book. Most of my published work is on American Institute for Economic Research. I tried to be on Nostr, but I'm not that good at it.
It's a great idea. It just hasn't scaled yet. I'm still going there. I'm still trying to help it grow, but it's going to be there eventually. If those of you who don't know Nostr, that's a whole other conversation.
Yeah.
But awesome. Joakim, it's been a pleasure. It's been an honor.
Fun, man.
It's nice to finally meet you in somewhat person. I love this. We've been corresponding for months and months, and I think this is the first time we actually seen face to face. So it's been a pleasure. Thank you for coming on Zoom Out. I hope to see you soon.
It's fun.
All right. Take care.